Hi, this is John Coumarianos for Real Investment Advice and Clarity Financial. It's debatable whether the recent turbulence in the stock market has created bargains in stocks, but there's one corner of the financial markets where mispricings, bargains, inefficiencies occur with a little bit more regularity, and that's the closed-end fund universe. What is a closed-end fund? Well, it's different than a mutual fund. When you buy and sell shares of a mutual fund, you're trading with the company, with the fund company. So when you buy shares, the fund company literally creates new shares for your dollars coming in. When you sell your shares, the fund company gives you your dollars back and then constrains or decreases the number of shares outstanding. The consequence of that is that the mutual fund trades at exactly the same price every day as its underlying holdings are worth. There's no difference between what the underlying holdings are worth if you were to buy and sell them individually, or what the fund is worth when you aggregate the price of those holdings. Closed-end fund is very different in many ways. A closed-end fund takes in money, investor money, once at an IPO stage. So it issues a fixed number of shares, and then the fund closes to new investments. And those shares trade on an open market. So when you and I buy and sell shares of a closed-end fund, we're trading with each other, not with the fund company. And the consequence of that is that the fund can get mispriced relative to its underlying assets. It can trade at a premium or more than the value of those underlying assets, or it can trade at a discount or less than the value of those underlying assets. And right now in the closed-end fund universe, there are quite a few funds, more than 200 of a more than 600 fund universe, that are trading at discounts to their net asset value. We took the liberty of making a list here. We want to tell investors that this is not a buy list, but it is a kind of first analytic pass at what might be cheap. And we noticed some funds are trading on the order of a little more than 20% discount to net asset value. We culled funds trading at the biggest discount to net asset value, and then we applied a second metric called a Z-score, a kind of fancy statistical metric that tells you whether the current discount of the fund, how that relates to its historical discount. And if it's big, usually less than negative 2 or less, that indicates that it's really discounted now relative to its history. So you can see all these funds have Z-scores of -2 or more, in addition to just very big discounts. We noticed that on our list of 10 here, there are 4, I think, municipal bond funds, so that would be a place for investors to look. But there are other kinds of funds too. We have a real estate fund, we have a stock fund, we have a tactical allocation fund. So there are a variety of funds that are trading at discounts to net asset value. One more feature of closed-end funds that investors should keep in mind is that they use leverage or borrowed money. So for every dollar you might put into a closed-end fund, you might invest in a closed-end fund, the fund has maybe $1.30 or $1.40 worth of underlying assets. That can be a great benefit when the assets you're buying are doing well and moving up in price, but it can be quite a detriment when the assets continue to fall. And right now, bond funds, of course, are always sensitive to interest rate movements, and if rates continue to go up, it can hurt these bond funds a little bit more than it would hurt a bond mutual fund. Finally, we want to say to investors, don't forget that this is not a buy list, but it is a good place, we think, to start your research on closed-end funds. Please take the time to read my report on closed-end funds on realinvestmentadvice.com. This is John Coumarianos for realinvestmentadvice.com and Clarity Financial. Thank you for watching.